Welcome back to the channel. Today we are going to answer one of the most commonly asked questions by anyone who is new to the Indian stock market. What exactly is Sensex and what exactly is Nifty? You hear these two words every single day on financial news channels, in newspapers, and in conversations about the economy. But very few people actually understand what they mean and why they matter. By the end of this video, you will have a completely clear understanding of both. Let us get started. Section 1. What is an index? Before we talk about Sensex and Nifty specifically, we need to understand what a market index is. The Indian stock market has thousands of companies listed on it. It is impossible to track every single company individually to get a sense of how the overall market is doing. So instead, we use an index, a carefully selected basket of the most important and representative companies, to give us a quick snapshot of the overall market's health and direction. Think of it like a report card for the entire stock market. Instead of looking at every student's marks individually, you look at the class average to understand how the class performed overall. That is exactly what an index does for the stock market. Section 2. What is Sensex? Sensex is the index of the Bombay Stock Exchange, also known as the BSE, which is Asia's oldest stock exchange, established in 1875 in Mumbai. The word Sensex is a combination of two words, sensitive and index. It was coined by stock market analyst Deepak Mohoni in 1989. The Sensex consists of 30 of the largest, most financially sound, and most actively traded companies listed on the Bombay Stock Exchange. These 30 companies are selected from across different sectors of the Indian economy: banking, information technology, energy, consumer goods, healthcare, and more, to ensure the index truly represents the overall health of the Indian economy. When the Sensex goes up, it means these 30 companies are collectively doing well and investor sentiment is positive. When it goes down, it means the opposite. The Sensex was started with a base value of 100 in the year 1979. Today it trades at tens of thousands of points, reflecting the enormous growth of the Indian economy over the decades. Section 3. What is Nifty? Nifty is the index of the National Stock Exchange, also known as the NSE, which was established in 1992 and quickly became the largest stock exchange in India by trading volume. The word Nifty comes from combining national and 50, because the Nifty consists of 50 of the largest and most liquid companies listed on the National Stock Exchange. Just like the Sensex, the Nifty 50 represents companies from across multiple sectors of the Indian economy. The Nifty was started with a base value of 1000 in the year 1995. It is the most widely used benchmark index in India today. Most mutual funds, portfolio managers, and institutional investors use the Nifty 50 as their benchmark to measure performance. Section 4. Key differences between Sensex and Nifty. Now let us quickly look at the key differences between Sensex and Nifty. The Sensex has 30 companies while the Nifty has 50. So the Nifty gives a slightly broader representation of the market. The Sensex belongs to the BSE, while the Nifty belongs to the NSE. The Nifty is generally considered more representative of the overall market because it covers more companies and more sectors. However, both indices move largely in the same direction most of the time because many of India's largest companies are listed on both exchanges. In practice, both Sensex and Nifty tell you the same story about the overall market direction. One is just slightly more detailed than the other. Section 5. Why do Sensex and Nifty matter? So why should you, as an investor or someone interested in the stock market, care about Sensex and Nifty? First, they give you an instant pulse of the market. Before you look at any individual stock, glancing at the Nifty or Sensex tells you immediately whether it is a good day or a bad day in the market overall. Second, they act as benchmarks. If your stock portfolio grew by 10% this year, but the Nifty grew by 15%, your portfolio actually underperformed the market. This benchmark comparison helps you evaluate your investment decisions honestly. Third, they reflect the economy. Over the long term, the Sensex and Nifty are mirrors of India's economic growth. As India's economy has grown, both indices have risen dramatically over the decades, rewarding long-term investors who stayed invested patiently. Outro. So to summarize, Sensex is a basket of 30 top companies on the BSE and Nifty is a basket of 50 top companies on the NSE. Both are barometers of the Indian stock market and economy. When they go up, the market is doing well. When they go down, the market is under pressure. Understanding these two indices is absolutely essential for anyone who wants to navigate the Indian stock market confidently. If you found this video helpful, please like and subscribe for more such content on stock markets and economics. Thank you for watching, and I will see you in the next one.